We released a video last week, which is a Peter Lynch response video, a reaction video. Peter Lynch talked about a stock that he bought at 16. It went all the way down to 3. And he kept analyzing on the way down. He called his mother at 10 and said, you got to buy the stock. It ended up at 50 in terms of all the shares he got from other companies because of the spinoff. And his comment was, here was a company that had no debt and was still owning all these businesses that were generating cash flow. It just made sense. It was just a market reaction. That's the way I view BABA. Could I be wrong? Absolutely. In the rest of this video, see, when I get comparisons of this to Peloton, Palantir, Workhorse, Nikola, Tattooed Chef, it shows me that people don't understand investing. I'm looking at the mispricing of a free cash flow business with low debt that has a lot of growth potential. Now, what are the risks? The risks are I lose my shares in the US and they go to Hong Kong. I'm fully fine with that risk. I talked to my bank at Merrill Lynch and they've told me, Paul, the worst case is your shares get converted to Hong Kong shares. And when you finally sell them in the future, it might take a few weeks to get your money here. That's really the risk? Yes. Now, could Merrill Lynch be lying to me? Absolutely. But guess what? Those calls are recorded and I will gladly sue them if that's not true. Love to sue Merrill Lynch. Wouldn't you, Mo?
I would love to sue Merrill Lynch.
Okay. Don't worry, Merrill Lynch. I'm not suing you. The point is, you get what I'm saying. 2, it's every Chinese company. Every Chinese company is down a lot. Every Baidu, JD, Nio, they're all down a ton for these exact concerns. The next question you ask yourself is, do we think China will be bigger and better 10 years from now than it is today? I've been saying since 2004, a friend of mine called me and said, somebody told me that China's going to be the #1 economy in the world someday. I said, bull blank. And I was like, no, they're right. Like what? I'm like, it'll be the biggest economy in the world, probably in the next 20 or 30 years.
We don't have a lot of room for growth.
Because we're already such a strong economy. Exactly. China has the fastest growing middle class in the world. China and India have the same number of people right now, but they make a lot less per person. So the growth potential for them is huge. They have 5 times more people than us. So as long as they make 1/5 what we make per person, they're the same size economy. And they will get there. We import a lot from overseas. We've even started to move away from China because how expensive China's gotten because of how strong the economy is for labor.
Look at the major companies moving out of China. Apple's they're migrating out of China in a lot of areas.
We don't buy much from China anymore. Why? They're becoming a stronger economy. Now, in the short run, can that be ugly? Yes, I am down big on my BABA stock. And guess how I'm sleeping? But I also didn't have 20% of my money in BABA. I hear stories of people saying, Paul, I have 30% of my money in BABA. I'm like, what the F are you doing? Guys, I had at most 2% of my money in BABA. 2%. And I didn't want to go over that. So I look at it going, guys, I have several cash flowing businesses, lots and lots of real estate. I sell options all the time that make me significant money. I make decisions. Now, what I want you to learn is my process. And the process I have here, I wish I had 100 companies like this. I wish Microsoft, Google, Apple, and all these other companies sold for BABA valuations. I would be all in on them. Yeah. Does it mean I'm going to be right on BABA? No. But I'm fully comfortable with the outcome of it because if I buy 30 or 40 companies that same way, I will do extremely well in investing. But it's the emotional side that's hard, right?
Absolutely.
Investing is simple, but not easy. What makes it not easy is the emotions. The numbers are the easy part. But it's hard to sit there and look at a company and say, oh my God, it's down 20% in one day. Okay. I got a call from somebody. Paul, are you okay with it? I'm like, listen, if you make this call to me, it tells me you probably shouldn't be in the stock. And he's like, no, I'm going to wait. I'm like, yeah, but don't do it because of me. I'm okay losing every single dollar of my money in BABA.
I definitely know who that was.
Of course you do. Wait. Same thing.
Yeah.
So anyways, enjoy this video and remember, it's about process here. And the process works long-term. It's been proven to. But in the short run, it can be very agonizing. Look at me and how calm I am. It's because of years and years of seeing this. And again, I could very well be wrong on BABA. That's why I'm not married to BABA. Every time it falls, I go, okay, let me reevaluate. And I'm like, I still feel comfortable with it. And there might be a point one day when I go, oh shoot, this happened. I'm not comfortable with stock anymore. It happened the other day on one stock. Last week, I did more analysis with Sleep Number, got somebody else's opinion. And even though they agree that Sleep Number is probably a value play now, when looking at how it's a luxury item, the stock probably has much more to fall. I exited my entire position on Friday. So I just want to disclose that to let you know I took a big hit. I'm okay with that. And I'm going to be watching Sleep Number because I want to enter it at much lower prices. Thank you very much. Enjoy the video. Holy cow, Alibaba is down big. At one point, I saw 18%. Right now, it is, you might want to refresh that. and it is currently down a lot more. So why is Alibaba down? Guys, all of China is down. The Hong Kong index has its biggest drop since 2008. The reason being their Prime Minister Xi just got a third term and he replaced a lot of older members. And the concern is the new members as part of their group are more ideological focused as opposed to economically focused. Now, a positive note. Second quarter, China grew 0.4%, which is extremely low. They just reported third quarter at 3.9%. So a lot better, but still not good for China. Alibaba is right now down 16% to $60. Now, first off, let me address some comments out there. If you think that buying an overpriced company with no future is the same as buying a much more reduced price company that falls 50%, you are not getting investing. I get it. 50% is still 50%. But if your process is buying a good cash flowing business that has a future at a reasonable price or a great price, that is so very different than making monster assumptions about a company like Peloton, Palantir, Workhorse, and all these other crazy overpriced companies that we told you to avoid that had literally the assumptions that would be needed to justify their price were insane.
Right. And not only did Peloton fall that much in price, didn't have cash flow at the time, now they are completely reinventing their entire business model because the first business model wasn't even close to working. You look at a company like Alibaba, they're not changing anything.
Yeah.
It's just this geopolitical stuff.
Now, does that have an effect? Well, yeah, for sure can have an effect on the company. Because if China all of a sudden became... But remember, I always tell people react to financial incentives very, very well. And China, yes, they might have some old socialist regimes in there, but I look at it going, okay, but they still are a country that really likes economic freedom and economic growth. And I look at Alibaba saying, okay, well, where do I see Alibaba? Do I think it'll be around in 10 years? Yes. Do I think they're going to make more money or less money 10 years from now than today? More. So third thing, can I buy it for a reasonable price today? Yes. So I look at that saying, okay, at that point, unless they're lying about their numbers, which is a possibility,
yes.
And this is why I only have 2% of my original money in that company, and it's fallen quite a bit now. Now it's down to like 1.1% of my money. But I'm okay with that. Because remember, I go back in time and I look at all of China. All of Hong Kong today fell.
Yep.
It wasn't Baba alone.
Specific. Right.
If you go look at all the Chinese, JD, Baidu, Nio, these companies have all fallen a ton in the last year and a half. And the other thing is, it's amazing. They're falling now for the same issues they had 2, 3, 4 years ago as they were skyrocketing. It's just that the news will focus on what's been happening to the stock. If the stock is going up, the news is going to say, look at how great the company is. If the stock is going down, look how bad the company is. They're not necessarily differences here and there in terms of they're not going to sit there and follow the actual right news. So again, first things first, do your own research. I tell people this all the time, and you got to remember, the reasons why I buy companies and the patience I can have is totally different than everybody else. I've got 8 or 9 cash flowing businesses. I have hundreds and hundreds of apartments growing to thousands at some point in the next 5 or 10 years. I have options income that I generate tons. I can be patient and sit in cash. I have 93% cash currently just in my brokerage account with tons of other cash in my business accounts.
And it's at $60 right now. I have said for a very long time, how long have I said this will go to $58?
Yeah, by the way, it bounced off 58.
There you go.
That's where it was today. It bounced off 58 bucks.
58 is a support
Oh my
level.
God, I forgot about that. You did say that.
And it's not, it could go to.
It wasn't, and by the way, it wasn't based on valuation purposes. It was based on charts.
It was based on charts. And I said, this will go to $58. Don't be surprised when it happens. And here we are today. And we'll see if it holds 58.
And it could go lower.
Absolutely.
The point is, you go back in time and look at great companies that were selling really cheap. The story was always, this company is dead. This is bad. What you're missing, that's being a value investor. You're always going to be wrong. When stocks are flying high and you say they're overvalued, you're wrong. When stocks are plummeting, the story follows why you're wrong. You know, I look at Baba. Let's pull up the financials for Baba. I just want to pull it up and show you guys analyst estimates. And I'm not saying analyst estimates are right, but analysts, you guys all love analysts. Look where they have the Baba stock going. It has it going to, now this is not the, in their currency, but it has it almost doubling in the next 5 or 6 years. That's double-digit growth. You look at revenue, it has revenue growth of double digits as well. So you sit there and say, okay, is it possible? There absolutely, guys, anything can happen. But again, my goal is to buy great companies at great prices. The whole idea of buying great company at a good price makes sense, but I believe there'll be a time to buy there'll be a time when I'm buying Apple, I believe, for under $100 a share. I will be buying Microsoft for under 160, 170 a share. I'll be buying, when Facebook was at 380 and I said, hey, there'll be a time when I'm buying Facebook under 150. Guess what? It's under 150 now. But the point is, over time, eventually, if I'm able to accumulate shares at a really cheap price, eventually all stocks will go up. Not all stocks, but all the big names will probably go up more and more and more. Okay. Now, is that for sure guaranteed? No, but I look at these balance sheets going, these balance sheets are great. Bad balance sheets are what cause a lot of problems. So again, do your own research. I'm doing mine. I'm not going to disclose exactly I am down a lot on Baba. It's 50% almost, and I'm okay with that. Again, my position is different though. I look at it saying, okay, now I can decide if I'm going to, and I sold more puts this morning at lower prices. I just believe in that. And I could be wrong. My goal is to pick 20 to 40 companies that fit a certain criteria. I'm not going to be right on every single one of them. And so far, I have a few stocks that are up and many stocks that are down. Guess what? Value doesn't care if the market's down 50%. Value will still go down with it. Right. Especially in this market we had, which was driven by low interest rates. If that doesn't make sense to you, I get it. It's hard to make sense. But if your logic is that Tattooed Chef, Peloton, Palantir, all these sky high prices, where I sat there and said, these are not justifiable, and they fell 90%. If you're sitting there saying that's the same as Baba being down 50% from when I bought, that is completely delusional.
Yes, it is.
Completely delusional. Intel being down 50% from when I bought, it's actually less than 50%, but the whole point is completely delusional. Meta down 40, completely delusional. And I get it. It's an easy thing to do because we are taught to look at recent history.
I know we're taught to look at stock price.
And stock price. And guess how I sleep at night? Just like this. When I saw Baba down this morning a lot, I was just like, okay, reevaluate, and if you like it, sell more puts. That's it. That's it. That's completely, and by the way, guys, that's the other thing. People always tell me, Paul, it's about time in the market, not timing the market. I'm like, good for you guys. I agree. And if I was a person that was worried about retirement, I would agree with that. And that's why I say dollar cost average for everybody out there. For me, I can make double-digit returns selling puts, cash-covered puts in the market. So I can sit on cash and still make really great returns. Is it tax efficient? No, but I'm okay with that.
Making money.
I'm still making 12 or 13% or higher on cash secured puts and paying 40% taxes on them. And all along the way, any stocks that I have their losses, I can write off on that income. Right. Okay. Right. I will still do fine. That's why I'm trying to teach a process. And that's why we always tell people, we used to disclose our holdings. We don't because of that exact reason, because people are just trying to mimic what we're doing. But I make my decisions for totally different reasons than everybody else out there, including all the YouTubers out there.
Yeah, absolutely.
I have more cash flow than all of them in the sense of like more streams of cash flow, and probably more cash flow except for Mr. Beast. That guy makes a ton of money.
Yeah, he
right.
Both of us to shame.
So back to Baba, guys. If you don't like it and you're scared of it, don't do something you're scared about. When I hear people have 10, 15, 20% of their money in there, I'm like, what are you doing? What are you doing? Who are you? You're not Warren Buffett. You don't know the company inside and out.
Right.
Warren Buffett believes in diversification is for people who don't know what they're doing. And he's right. That's why he liked to hold back in the day. At one point, he held 53% of his stock in American Express something like that. It's like, guess what? That was at a time when everybody's like, American Express is going to nothing because of some sort of lending they did on oil or something like that. I don't remember what it was, but he can do that. He understands that. I would never feel that way. So anyhow, that's where guys, it's going to get worse for all companies at some point in the future because I still want to pull up our Mo. Can you take up to go to Mo and so Mo can talk?
I do want to show guys. We looked at analyst estimates. They had low double digits going. I put in 7% revenue growth over the next decade, 15% profit margin, which I think is low.
Well, it is low. Their last 10 years have been 22%.
Exactly right. And I did this on purpose. I put in 7, 15, 15, 16 PE, 15% return. As long as these numbers as long as the numbers that they've been putting out are true and not fabricated numbers that are coming out of China, you are still a buy all day. This is when I look at this and I just butcher my assumptions and say, okay, I'm still buying it for really good value today.
Yep. And so back to my conversation about stock market value. This is my stock market GDP ratio. Those in our community who belong there, people have been asking me, are we going to put this on our site? We are absolutely going to put it on our site as a constant reminder of where we are at any given time. We're currently at 1.463. Actually, what's S&P at right now, Mo? I need to update this.
Give me 1 second here.
Well, you have to just go to, it's just that, I just go right here. It's at 3771.58 or something. So right now, the stock market GDP ratio is 1.507. Our historical average is 0.929. So that's an overvaluation based on this of 62.2%. To see where that's at, the peak of the dot-com bubble, the peak, when it hadn't even started crashing yet, it was at 1.461. So we're higher today than we were back then. It says fair value is 2,300 in S&P. Now, guys, it doesn't mean this is exactly set in stone, but the correlation is a negative 0.81, which is a very high inverse correlation. And it makes sense. The more you pay, the less your return. The future 10-year return, on average, it's 6.6%, not including dividends. If you buy when it's undervalued, it's 9.3. When you buy when it's overvalued, it's 2.3% over the next 10 years. But here's the scary part. When it's over 30% overvalued or higher, your return is a negative 0.1. And we're 62.2% overvalued. So with that said, if stocks were to fall by 50% or 40%, everybody's going to fall.
Absolutely.
Everything is going to fall. Value plays, the goal is they just don't fall as much, and or you're able to buy much better shares at a much lower price. And when they finally start to rebound, they'll be the first to rebound and really surge.
And they'll rebound faster because people flock to cash flowing companies.
Look at Uber. The Uber CEO 2 or 3 quarters ago said, the world has shifted. We need to focus on cash flow. The world cares about cash flow now. Yep. I thought that was a brilliant statement by him.
Statement.
Because he was just like, listen, the world of us being able to get away with all this losses all along the way isn't going to work anymore. Mm-hmm. Look at the SPAC deals. Look at NFTs. Here's an amazing part. Somebody, I'm sure someday will say, how did you criticize NFTs when you have a stock that went down blah, blah, percent? I'm like, NFTs literally had no value. In 1 year, oh yeah, here are the SPAC deals.
Look at these SPAC deals. So SPACs in 2021, there were 613 SPACs in 2021, 82 in 2022. You can see this just massive growth and now this decline. It's getting back to 2019 levels when nobody even knew what a SPAC was.
Yeah.
Nobody knew what a SPAC until COVID was.
Yeah, that's when SPACs really were big. Yeah, took off. So anyways, subscribe to the channel, guys. If this makes sense to you, trust me. We have over 1,800 videos. It's great. It's fun. We teach a process. It's a really great time. If you don't believe in what we said, I get it. I 100% get it. It's hard. I can't teach anybody to be a value investor. It either makes sense to you or it doesn't. And over time, it'll make more sense. But good luck to you and pray for my Baba stock. Thanks. Take care.